Welcome back. Rising interest rates have become a way of life in recent months, haven't they, with banks passing the pain on to borrowers.
But which lenders have hiked their rates the most? Today, money expert Effie Zahos joins us live to tell us all the details. Good morning.
Name and shame.
I feel like I'm naming and shaming a little bit, but this is actually like a little bit of a tip-off from a mortgage broker, home loan experts, that said, have a look and just see which lenders have increased rates more or the fastest. So I did just that. And these are lenders that have increased the rates on at least one home loan by more than 3% since
Just a few of them?
There's about 19 there. So they've got one home loan that they've increased the rate by more than the official total cash rate hikes of 3% by the RBA. Now, let me just make this clear. That does not necessarily mean these guys have the most expensive. What it does say, and this is the tip that consumers need to take out from here, that because rates are rising, and depends what happens with the Fed in the US as well, the international markets, some lenders are either increasing at A, because they just want to fatten their profits, or B, the cost of funding is getting too much for them, so they have to increase them higher. So typically, the big banks may be better off because they have deposit accounts and non-banks don't have deposit accounts.
A bit more. What's been more reasonable? Who has been more reasonable?
Yeah, well, Karl, the cheapest rate now is 3.99%. OK, but you need a big deposit and a fat deposit to get that. I just want to show you this, the difference between the average rates of, saying, going to a bank, an ADI, versus a non-bank, so they don't have deposit accounts. The difference is still in the non-bank's favour. So what that means are, chances are you'll get a cheaper rate with a non-bank, but that difference is closing. Pre-cash rate hikes in May last year, that was almost 1%. It goes back to what I was just saying before. This is a question that borrowers need to ask themselves when they go to a lender. How much have you actually increased your rates by? Because cost of funding could be an issue. Is there a way you can increase your borrowing power? Well, this is the big problem, isn't it? Because we've seen these rate hikes and we heard some forecasters saying possible 1%. I'm more an optimistic type of person. Inflation did come a little bit higher, but still under the RBA. We have cemented definitely a February rate in, but just have a look at this. Pre-rate hikes back in April, someone on a single income of $92,000 could borrow at best, say, around $560,000. That has dropped now down by $133,000. If we see a 1% more hike in rates, it's going to drop by a total of $170,000 less. Where can you buy a house when you can't borrow?
But isn't it dropping off a little bit? Well,
numbers come out today, Karl, from CoreLogic, and they show, yes, every state has seen a drop in January, but prices are still higher than the pre-COVID levels, except, you know, Melbourne only needs to see a drop of 0.4 and they're back to that level. Interesting to see. Look at Sydney. Dwelling prices for the first time in a long time, it's under that $1 million mark.
Wow.
Shop around for these interest rates. There'll be families right now who are really looking at what lies ahead this year in the next 4 months with interest rate rises and going, what do I do?
Well, the key thing is, I'm seeing in the data, like I said, the cheapest in the market is 3.99. The average could be around 5 or 6. There's a big difference there. And you've got to do it. Even the RBA says you can pick up a discount of 0.5 by simply being a new customer.
Hey there, Today fans. Sarah and...
What's my name again?
Oh my goodness, Karl.
Hey, thanks for watching our YouTube channel, though. Subscribe now for more news, special reports and amazing Aussie stories.
And Karl misbehaving,
Whoa,
of course.
That never happens.
Always happens.
What's she talking about?